Nothing really new, but enough to go and really kick the dollar, to go and get across what he thinks happens next. Nick Twidale from FP Partners is standing by in our Barangaroo studios. Nick, welcome back to the show. Great to go and see you there. Give us a sense to, I know this move in the US dollar, the market's just looking for excuses to sell it at this point in time.
I think so, yeah. We've had a bit of a change over the last few weeks, haven't we? And it does feel like the market really does want to sell for any real reason we've got. And last night, I think you just mentioned in the Aussie, I think we got almost a perfect storm for the bulls. We've got a little bit of encouragement from China, and obviously those Fed minutes, so they've come out a little bit more dovish. I think it's given that encouragement for the market to really sell the dollar. But like you said, it's not a massive green light from the Fed as far as I can see from the currency terms. But I think the market's jumped on it, and we've seen some decent appreciation in currencies against the dollar across all the majors.
Let's go and have a look at the Aussie. We'll narrow down to begin with at the hourly level and see what's going on, because it has been quite a turnaround. In part, what we saw on the back of that surprise move from the RBNZ, which we'll get to in a moment yesterday. But that looks like we're at a pretty key juncture at this point in time.
Yeah, there's a couple of the majors that have just hit some fairly important levels, I think, for the next sort of medium term and moving into those Christmas markets. And as you can see, the Aussie's batting up against that resistance trend line. I think if it can break through there and that sort of the multi-month highs that we saw earlier in the month, if we can get through there, and I think it does open us up for another little run back up towards 70 cents. But we probably need a fresh catalyst to really take us there, and we'll be keeping an eye on the market. Obviously, Thanksgiving this week as well. That tends to lead us into a bit of rangy markets. So going to be interesting to see if we see a good concerted break above these levels, or whether we just sort of like end up just a little touch and maybe fade back off into the range.
Okay, so from an hourly perspective, we've got a key test to the top side coming up at this point in time. Let's go and zoom out and have a look at the daily and see what the picture looks like there. That downtrend's still well and truly in place, it looks like.
Yeah, I think so. And I think until we see, we've got to see what the Fed does. And once we see that, I'm still, as you know, I'm still sticking to my guns that maybe we're going to see a little bit more dollar appreciation. Now, whether we have seen the high in the dollar now, it looks like we might have done for the medium term. But in line with that downtrend, I think most people would be looking at that and probably fading this move, and fading the move maybe up towards 70 cents until we get a real firm change of numbers out the States. And obviously something I think for the Aussie dollar enthusiasts, something out of China, because we're looking at news on a daily basis. Aussie traders are really focusing on China at the moment. And until we see a change, until we see some really positive up news from China, then I think there's still an argument to fade rallies in the Aussie.
Yeah, I know not everyone likes the macro side of the equation out there, but just one of the headlines that came across earlier today from the People's Daily, the mouthpiece of the government, of course, they're saying that China must act quickly to stop the spread of COVID. That doesn't sound very promising when it comes to reopening anytime soon. We'll keep a close eye on that one, but certainly that, as you mentioned, the China news flow has been really influential when it comes to the Aussie dollar over the past little bit. When you talk about the Kiwi, though, it's not just China. It's Adrian Orr and the RBNZ yesterday. I don't think many people really expecting they will see a 75, but they delivered.
Yeah, they delivered, and it was quite punchy statements afterwards as well, wasn't it? It was like they're very confident over the ditch. So it's going to be interesting to see where we go. I think reading from yesterday, like obviously the Kiwi got a decent move, and then what we got from the Fed overnight's helped the flightless bird. I suppose. Trading the Kiwi, you'd probably be looking to get long on the crosses, and I haven't put the traditional Aussie Kiwi cross in there, but it was a nice break to the top side, and I think given what we heard from the RBNZ, maybe you're going to be looking for a move back up to that 68 cent level. But I think we're going to be Kiwi traders. We're still going to be looking at data very carefully over there, and we'll see if the optimism that we got from the RBNZ, if we've got that optimism, and if it's well placed, then maybe we do see some further upside for the Kiwi.
Yeah, at the moment it looks like we're on the cusp of potential a technical break coming through. When it comes to one of the factors at the moment, we know that interest rate differentials are one factor that determines what goes on with currency market movements. There's also a growth premium that's often attached to it. The RBNZ is talking about a recession, albeit only a very mild one in their opinion, that's likely to come through next year. Is that something that might go and hinder, do you think, the Kiwi moving forward?
I think it can do, yeah. And if you speak to a few of the traders over in New Zealand, I think there's a wary eye that the recession might come in, and it might be a little bit harder than the RBNZ's feeling. And then if that global growth story does turn, and it does turn quite sharply, then I think the Kiwi could be one of the currencies, probably along with the Aussie, that takes a harder hit than some of the other majors.